You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. Be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it's time once again for TWIFO This Week in Futures Options. We got a lot to break down, not a lot of time to do it, so we're going to dive right in, folks. Of course, I am joined by a cavalcade of fun stars from throughout the world of futures and indeed futures options. Let's kick it off. It's traveling season, so our buddy Sean from FTSE Russell, actually over there in Asia for some conferences over there, so won't be able to join us. Our buddy, my cohort, Mr. Nick Howard, also traveling, but we think he might be able to join us here for the beginning here before his flight takes off. Mr. Nick, sir, from Bantix, are you there? I think he's still having some connection issues. He was trying to join us from the airport. We'll see if we can get him on before his flight takes off there. We are also joined by an old friend of the program, even though he hasn't been on in a little while. It's been about a year. We got to have him back on. A lot going on in his neck of the woods. He is Jeff White, the Executive Director for Energy Products and Services over there at CME. Jeff, welcome back to TWIFO, sir.
Hey, Mark. Thanks for having me back on.
Glad to do it. And we are also joined by a newcomer to the program, holding down the old FTSE Russell hot seat. Jeff's in the CME hot seat, so holding down the FTSE Russell hot seat today is a newcomer to the show and indeed to the network. He is John Seguin, former member over there at CME, and now he's the head futures coach over there for our old friends Market Taker Mentoring. John, welcome to TWIFO to you as well, sir.
Thanks. Good to be here.
And John, as we are wont to do with all of our first-timers on the network, why don't you give us a real quick overview of your background in the futures markets and what it is you do at Market Taker?
Okay, so back in the middle 80s, I went to the Board of Trade for a summer job, ended up never leaving. I was going to be a high school teacher, and just that place was just too exciting, and I just never left until about 2002. For the years up until then, I was a broker, mainly in treasuries, 30-year bond pit mainly. Spent some time in the S&Ps, a little bit in the grains. But mainly a broker, not in the pit, but outside the pit, executing orders for institutional traders and fund managers and such. And in 2002, I developed a charting software and have been teaching it and some of the methods that I have, built some strategies for traders. And now in the last 2 years, I joined MTM and teach a daily futures class. And some monthly things we put together, and also write daily newsletters for commodity traders and mainly just futures traders.
Good
Not
stuff.
A whole lot of option stuff, but a fair amount of it.
Good stuff, sir. We'll get to all that in a little bit. Glad to have you join us. Kind of a nice boots on the ground perspective out there educating the retail when it comes to futures and the use cases there, and also some options as well. But we'll get to it. I know everyone's traveling, everyone's running around, and Jeff, I think you have to run around a little bit. But as we've been doing a lot lately here on the show, we've been bringing on different kind of department heads over there, for lack of a better term, over there at CME, and having them run down ags and all different types of products we're seeing over here. Jeff, obviously you represent the energy options complex over there. Lucky for us, because there's a lot going on in your neck of the woods over there. So why don't we start kind of drilling in a little bit. What's been lighting up your tape over there over the last few months? What are some of the highlights and things that are registering for you when you're looking at energies and energy options over there at CME these days?
Yeah, thanks, Mark. You know, the name of the game right now is volatility and liquidity. So, you know, we've seen extreme volatility lately, both in our crude oil markets and our natural gas markets. You know, we're talking about 30% price moves up in natural gas and a 30% price move down in crude oil. So as you can imagine, we've seen pretty high levels of volatility that we haven't seen for years. So what that has led to has been record volumes in our options complex over here at CME and the energy side. We had a single day back 2 weeks ago where we had over 1 million energy options trade in a single day, which was the highest we've ever seen before. You know, we've set records in WTI crude oil options volume, natural gas options volume. So what the story has been in this sort of hyper volatility environment, the liquidity remained. So traders, whether they're hedgers or traders getting in, getting out of positions, whatever they were doing, these traders were always able to find the liquidity they needed on our screen. And so really it's been pretty orderly markets despite how volatile they've been. So we're looking to build on this liquidity. We're seeing, what's really been interesting is in the oil options market, overnight trading has become sort of the biggest story of the year. we're seeing overnight volumes in oil options up 30+% this year, while U.S. hours are really only up 3%. So it sort of tells the story how WTI crude oil has become a global oil product, and traders from around the world are now looking to CME's Globex venue to trade these oil options. So it's exciting times over here in the energy markets.
Yeah, we talk energy almost every week here on the show. Usually WTI, but now Nat Gas is moving into that as well. Like I said, I know we have a lot to get to and not too much time to get to it. So since you're our guest here as well here, why don't we start, Jeff? I'll give you the choice. Nat Gas and crude oil and WTI are really what lights it up with our audience, and certainly are lighting it up for you guys as well. So where do you want to start, Nat Gas or WTI, sir?
Why don't we start with Nat Gas, because it is the most volatile of all the commodities.
I don't know what you're talking about. I don't know what's going on out here in Nat Gas. Has something been happening in Nat Gas? I've been unaware of late. But you're right. Yeah, Nat Gas has been moving and shaking. Of course, we saw the huge, some have called it the Black Swan event to the upside there in Nat Gas recently. Nat Gas, if you're familiar with it, listeners, usually a relatively staid product. Doesn't have those big kind of extreme moves. When it does, it's a big deal. And when it does to that extent, it's fairly unprecedented, so it was a big deal, and a lot of interest, a lot of people hitting us up about Nat Gas these days, as you might imagine. Today, we're kind of seeing a little bit of some of that coming off here, and it's kind of been the trend for a little bit now here, for a while out here, with EIA coming in and reporting domestic supplies of Nat Gas falling by 59 cubic feet. So that, of course, they had forecasted a decline of 73 billion cubic feet. So as a result, we're seeing the Nat Gas off here a little bit, even though coming in right now on net on the week, it still is up a little bit here overall. So it's been a crazy time. Obviously, I'm sure, Jeff, a lot of people have been hitting you up about Nat Gas, a lot of clients out there. What have you been seeing and hearing from clients, and what's been lighting up the tape over there in CME Nat Gas of late?
Yeah, so here's sort of the big picture. What's going on in the Nat Gas market is prices up over 30% this month. And what's driving it, really probably three main reasons. One, colder than normal weather this early in the winter. Typically, this type of cold snap we've seen across the Midwest and even the East Coast doesn't happen until later in the winter. So I think it caught a lot of traders off guard who trade based on weather patterns. So we've seen spike up in prices for increased use of natural gas. Second, we had the lowest storage levels of natural gas going into the winter withdrawal season since 2005. It's been 13 years since we've seen storage levels this low going into winter. So the supply concerns are out there in the market. And then sort of a broad looking forward in the nat gas market is there's rapidly growing LNG exports going to Asia and the rest of the world. So Henry Hub natural gas, which is the CME contract, is now being exported around the world through LNG. So we're seeing increased demand for nat gas. So what does that mean for our markets is going into November, volatility was about 40% at the money implied vol. We had a high of 125% vol, if you can imagine 125% vol on November 19th. And Mark, if you look at sort of the year-to-date average implied vol, it's only been 28%. So we're seeing in 1 year, 2018, we've seen the all-time lowest vol ever of 19% in the summer to the all-time highest vol of 125%. So it's been a wild year in nat gas.
Yeah, I think that's a euphemistic way of putting it, but you're right. We've seen extremes in the underlying. We've seen extremes in the volatility. These are definitely somewhat unprecedented times here in terms of volatility. John, you're out there kind of boots on the ground, educating a lot of the retail in these products. I'm sure energy, I know from talking to Dan, I know energy is a big driver for you guys. Usually crude oil, but have you guys gotten a lot of interest of late in nat gas, or is it maybe the opposite? Maybe the extremes of volatility and movement, are they spooking the retail a little bit and they don't want to play out there?
Actually, that's the case. It's a little bit too volatile to really get involved. But what's happened recently is that now people are looking for. There's a type of a pattern that develops after a move like this, where we sort of sit back and wait for opportunities to trade. It's just we have to recognize, and we've been talking about this, that while nat gas is around 450. Or 460, it's pretty much where the fair price is. After this big move that came out 3-4 weeks ago, I believe that the fairest price since then is probably about 455. So what we're doing is we're thinking, okay, what's about an average month range or something thereabout, which is, I think an average month range is probably like 45. And what this month we had a move of about $1.76 or something like that. So now it's about, okay, where can we go and pick off, sit and sort of wait in the weeds for good trade location. We've been talking about where buyers came in to defend the market after it made that high 2 weeks ago and then ripped right back off. And then last week it did the same thing. So we're looking somewhere around $4 and about 470 as levels that are probably going to contain a fair amount of the volume over the next 2 to 3 weeks or so. So as speculators, we'll wait for the market to get up there. But as option traders, you might want to consider those handles or as strikes, where, when you have a move this big, typically you're going to go through these crazy up-down patterns. You're going to get 2 days up, 3 days down, 4 up. But really what the market is doing is running in place or establishing a new fair price. And so far it looks like that's building right around, like I said, right around 450. We almost use that as sort of as gravity, that as the market stretches away from there, say 3 or 4 points, we should be looking for good resistance, or this is where sellers ought to come in. And of course, like I said, somewhere around $4 or 410. That's where we're looking for support. There is not a whole lot of day trading going on. It's like, hey, wait till we have good trade location, and then we'll make a wager.
Yeah, these are certainly turbulent waters for people, but also on the flip side, it has attracted a lot of people to a market maybe they weren't paying attention to before. So kind of pros and cons. It's scary. They're rough waters, but if you can handle that, it might be interesting, certainly to watch and learn about here. And speaking of watching it, just looking here really quickly, breaking it down. By the way, listeners, you guys can do this live for yourself. CMEgroup.com/Twifo is the place to get the reports. Just really quickly, let me check in, see if he's got his connection settled. And really quickly, Mr. Nick, sir, are you there? Are you joining us? Okay, yeah, he can't get his. I guess the airport is too hard of a place for him to make his connection work here. So I'll run down through the old quick strike stuff for you, of course, listeners. Right now, coming into the showtime here, we're seeing that front contract there in Nat Gas hovering right around a 460 the future. And so we're seeing upside driving the action, about 40%, 41% of all the options volume this week coming in that Jan contract. And the big trade out there this week was in the upside 5-handle calls to the tune of almost 13,000 lighting it up. The lion's share coming yesterday, 7,300 yesterday, about 3,500 today, Tuesday, and about most of that, a good chunk of that opening, about 2,000 opening. So a lot of positioning up there, maybe a lot of panicking, covering. Case we saw a big move, case we see another one, maybe people positioning for that upside to continue. Either way, upside calls, 5-handle calls, followed by the 4 puts, not all upside, all in Jan as well, 9,200 of those hitting the tape. Again, 5,000 on Wednesday, so the big action day here on Wednesday. About 3,000 hitting the tape as well, though, so the puts are lighting it up a little bit today. And then if 5's not far enough out of the money for you, this is Jan, remember, by the way, listeners. 6,700 up to 6 calls. I mean, 6, that's just... Compared to where we were a month or so ago, that seems like crazy town. But here we are, 6 calls lighting it up to the tune of about 6,700 this week. Again, Wednesday being the big day out here. And I know we can keep rolling on skew and things, but I know, Jeff, you have to run in a little bit too. So why don't we get some of your insights, what you're seeing over there in all things WTI as well, because that's also been fairly active this week.
Yeah, Mark, WTI, I mean, it's really been just almost as volatile as natural gas. So what's the big news is we've got an OPEC meeting next week coming up at the end of the week. So prices we've seen dip below $50 for the first time in over a year. You know, the factors driving the oil markets right now. So traders are focused on how much oil will be produced in the coming months. You've got booming U.S. production at record levels, close to 12 million barrels a day. You've got more Iranian oil supply available than predicted. You've got Russia and Saudi Arabia ramping up production from the summer, and you've got WTI becoming more of an export product to destinations around the world. So what we're seeing is participants from all over the world who have never traded WTI before starting to trade our WTI options because they're so liquid on the electronic trading venue. We have over 83% of our volume in WTI options trades on CME Globex. So month to date, we're at a record, something like 275,000 contracts per day are trading in WTI options on screen, including we had a single day record this month. So it really, you know, traders are positioning themselves. You're seeing a lot of trading around the main levels like 50, 55, 60, and 65, traders positioning themselves. in the options market. So there's really a lot of information that traders can get from the options market, whether it's the steep put skew or sort of the strike, where the strikes are sort of laying out. But yeah, WTI options are rocking over here.
And again, I know you gotta hop off in a little bit. So I know a lot of people, by the way, if you're interested, and we're going to break down all the WTI options in a little bit here. But if you're interested, of course, in playing along, maybe seeing what the market's expecting. I know the FedWatch tool is pretty popular, and Nick and his team have kind of put together a cool OPEC Watch tool for you guys over there at CME as well. Just type in CME and then OPEC Watch into your browser, listeners. That'll get it to you. Or you can also go to cmegroup.com/OPEC Watch, all one word there, of course. And you can see it for yourself what the market's pricing in for the December 6th OPEC meeting. Probabilities of a small production cut, 69.25% here right now. Literal no change, about a third, and a significant production cut, no life to that whatsoever, about less than 1%. So I know, Jeff, I know a lot of people are interested in that tool. It's probably driving a lot of interest for you guys over there in the CME energy side these days, sir.
Yeah, we're really excited about this OPEC Watch tool. And you're right, it's sort of similar to the FedWatch tool that's been so popular. So really what we've done is, your listeners know, and Mark, in the options market, there's so much information that can be taken from the volatilities and deltas and sort of where traders are positioning themselves. So what we did here was we took all the information from our super liquid WTI options market and created probability where traders were positioning themselves ahead of the next OPEC meeting. So you've got the OPEC meeting December 6th. So we looked at the next weeklies and the next monthly option, the expirations closest to the OPEC meeting, to see the probabilities of certain outcomes. So we looked at three basic outcomes. And it's really no change from their existing agreement, the OPEC existing agreement, a small production increase, a small production cut, and a major production cut. And really you can see where the traders are positioning themselves right now is right in the middle, sort of a small production cut between 500,000 and 1.4 million barrels. There's about I haven't looked in the last hour, but it was about a 70% chance of that with a 30% chance of no change. And what's interesting is our tool is showing a less than 1% chance of a major production cut. And if you ask sort of the experts in the marketplace, they tend to agree with that. So really, this options market is so valuable in what information it has, and we found a way to extract it into a simple, easy-to-use tool.
All right, got cool tools cooking, a lot of action in Nat Gas, a lot of action in WTI. Before we wrap up here really quickly, Jeff, anything you want to leave our audience with, any teases, maybe any other complexes you want to check out that are kind of just getting buried under the onslaught of headlines for WTI and Nat Gas right now, but they're also pretty active. If you want to leave them with a little bit of a hint, a little bit of a tease, sir, now is the time. The floor is yours.
Yeah, Mark, one other thing for your listeners is that we just launched a brand new oil contract called WTI Houston. And basically what it is a WTI oil contract deliverable at Houston in the enterprise delivery system. So we launched a future and an option on this contract. And really, it's just another location for traders to hedge their oil risk and trade their oil risk. We're seeing a lot of trading in the futures contract, over 1,000 a day in the last few days. We also listed options on this contract. So we're hopeful for an exciting options market in the WTI Houston world, but it's something that your listeners should check out on our website to learn more about WTI at Houston.
There you go. Check it out, cmegroup.com. Jeff, glad we can have you on. We'll have to get you back on when things aren't quite as hectic and when everyone isn't traveling, so we can spend a good full hour getting into all this stuff. But thanks again for joining us, and we'll talk again soon here, Jeff.
Sounds great, Mark. Thanks for having me on.
All right, there. That was our kind of our catch-in, all things CME Energy. Things are lighting up so much here, listeners. We wanted to kind of get a little bit of an overview of what they're seeing over there. But, John, these are obviously interesting times for you guys here as well. I know from just talking to Dan in the past that I think WTI and kind of crude were the kind of primary drivers for a lot of what you guys are doing from the client side over there. Is that still the case? Are you still seeing people mostly come into MTM looking to talk about and learn about how to trade WTI futures and options, or is that maybe changed for you guys over there?
No, I think that's certainly a big part of it. I mean, for us, or at least since I've come along, we really focus on an energy product, and crude oil has been one, and now natural gas. Obviously, with this volatility, we'll get a lot of inquiries on trade setups for that. But precious metal, equity index, and treasuries. That's like the 4 top ones right there. We'll delve into some foreign exchange every now and again, and even some grains. But yeah, well, with the volatility like it is right now, pretty much every class we have, we always pretty much start with the equity markets because they're pretty darn volatile these days too. But then we move into energies right away, followed by treasuries. We try and start off with the most volatile markets to set up our trades, and crude is really at the top of the list.
I don't know what you're talking about. Is equity volatile these days as well? I haven't noticed. I've been so distracted by crude. Yes,
I know. As a matter of fact, I think that something that happened yesterday after Fed Chairman Powell came in, and the equity markets had this sort of relief bid that came in. It was one of the better. Actually, I saw some more buying or people that are willing to maybe go in and play the long side in crude oil, because the ride in crude oil and the ride down in equities, there's been a lot of similarities there. And if we can get the equity markets to sort of turn the corner higher, it looks like we might be getting a bid built up here in crude oil. I don't want to jump in front of the OPEC meeting and say this is the time to go bottom fishing, but that's what people are looking for, actually. I'm getting more inquiries about where's the good place to buy and what's my risk. Just thinking for some sort of a correction, almost like the opposite of what just happened in natural gas. We moved from 77 to 50 in crude oil in 2 months?
Yeah, not even like a month and a half or something like that.
Yeah,
it's been just unprecedented.
That's just insane.
Yeah.
So if you took what I said in natural gas and sort of turned it around and said, hey, we've got this normally after a move like this, market's going to go through a series of pretty whippy trades while it finds a new fair price. And we're not even close to that yet. But some of these peripheral markets might give us a clue that it's okay to maybe play the long side a little bit here. One of the things I'm seeing this week is what I've seen in the last 8 weeks is we make a high for the week pretty much Monday or Tuesday. We settle every week below the fair price of that week, and are actually often making new lows on Fridays. We're seeing a subtle change this week, and this market's found like a fair price somewhere around 51. So I'm really monitoring that one. I think a settle this week above 51 would be sort of a positive, meaning if you're short, it's probably good to take something off the table now. After a run like that, this is, we're looking for, hey, you know what? This was a great run. We're tightening up on our stops that we're riding on the way down. It's almost like an exponential stop, trailing stop that tracks the market faster because it's getting oversold or because it's oversold. I know that might be a concept a lot of people wouldn't understand, but the point is the speed of this move down is so extraordinary that you kind of need to lock in prices a little bit quicker. So I think today I had one client, we moved his stop loss down to like 52 or something like that. So if it gets above 52, that would be a very positive sign heading into the next week or so.
Yeah, it's been a lot to go on, a lot to unpack here. Everything you just said, equities and crude. We'll finish up here in crude, then we'll move on to the other products here. But yeah, it's been an interesting week, like we mentioned. It took us how long to go from what was it, 43, the previous low, all the way back up to the mid 70s, better part of a year, if not longer. And now here we're seeing most of that, a good chunk of that, reversed in the span of a month and change. So yeah, the downside move has been kind of unprecedented out here in WTI. As a result, we're seeing just massive moves in the vol. You can look at a lot of different ways. The OIV, which is of course the VIX of WTI, is a good way to get a little bit of a barometer for that. It hit 63 last week. I've been listening to the shows for ages. It's been in the 20s for the better part of a year. If it spikes up every now and then into the high 20s, things are getting crazy. It's pretty much more than doubled out there as we kind of continued to break through more strikes to the downside, more strikes to the downside. We kept saying the volatility, the bid and the skew was all to the downside in WTI, and that played out as we continued to move to the downside. We kept moving to richer and richer strikes from a vol perspective, and as a result, The vol is at extreme levels. It's actually come off a little bit this week. It's not quite as high as it was OIB. I think in the mid to low 53 or so right now. Let me pull it up and see how we're looking here as the show is continuing. 53, almost 54. So off about a handle today. So a little bit coming off obviously near-term highs, but still extremely elevated compared to recent weeks. Of course, a lot of this action today, we saw it breaking through the 40 handle, breaking through the 50 handle, I should say, into the 40 handle here today for the first time since a little more than a year ago. October 4th of last year was the last time we closed below 50. We hit 49.41 a barrel even a little bit earlier here today. Then lo and behold, who should ride to the rescue of the crude markets but Russia? Coming in, they're always kind of been the wild card here in the crude space. OPEC's kind of doing its thing, and Russia kind of a bit of what are they going to do? Are they going to follow along with their production cuts? Are they not? Are they going to play ball? Are they going to not play ball? Maybe indicating today they may be playing ball with OPEC and cutting their production kind of in line with what OPEC is looking to do. So that given crude a little bit of a boost today, WTI turning around, getting back north of the 50 handle as we're coming into showtime here. Right about 51 and a half or so up about a handle and a half net on the week. So it's been an interesting one to watch from all sorts of levels, as Jeff alluded to earlier. Vol levels not seen really since the spikes getting into that big. If you've listened to the show for a while, back in that big OPEC meeting back in November 2016 when they first kind of set all this ball rolling and all this craziness in motion, that is where we saw the skew kind of shift dramatically. We haven't seen big moves out there to the vol to this level since pretty much then. So it's been quite a while out here for that. And in terms of what people are lighting it up out here this week, the lion's share of the action coming in the Jan contract here, not in the weeklies as we kind of come to expect here, but in the Jan with about 43%. Again, cmegroup.com/TWIFO is a place you can go to follow along with this report live. And we're seeing the 50 puts, surprise, surprise, 50 puts kind of dominating the tape here this week. 36, almost 37,000 of those hitting the tape this week. Lion's share of those coming on Tuesday and Wednesday, about 11,000 and 10,000 each. But a good clip today, 8,000 here today. So as we continue to threaten, continue to push that 50 strike, we're seeing those puts continue to light up. So I don't think that one's a surprise to anybody. A good chunk of that opening as well. But there's been a lot of back and forth on that strike, as you might imagine. It's a strong fundamental, technical level, psychological level. Will we break the 50 handle? Won't we? So seeing a lot of puts lining up there. Not a huge surprise. Let's dig a little bit farther. 40 puts. Oh, interesting. 40 puts also lighting up the tape this week with about 26,500 of those bad boys. The lion's share coming on Tuesday, 8,100, and about 7,000 today. So another active day today, again, as we kind of retested those lows earlier today. About 9,000 of that is opening as well. So back and forth trading on the 40 strike as well. And if that's not far enough down for you, we got a nice, if that's too far, I should say, we got splitting the difference here, 45 puts coming in. So a nice little put strip, 50, 45, 40 out here in Jan and WTI with about 22,000 on the tape. A good chunk of that, most of that coming today, almost 10,000 on the tape today. So as we continue to threaten strikes and new levels to the downside, puts are where the action is. There are some calls lighting it up though too. Actually, just slightly edging out in the top five, the 45 puts were the 55 calls, the double calls, doing about 22,000 and change this week. Kind of evenly split between Tuesday and Wednesday, about 7,800, 7,500 respectively for those. Only about 4,500 on the tape today. And again, about a third of that opening this week as well. So a lot of paper kind of all over the place in the front month because crude has been all over the place out here. So there's been a lot of action out here. We talked about the vol a little bit. In that Jan contract, let's see here as well. We mentioned before, we've been continuing to go to the downside here. For a while there, we were saying it was pretty much just moving along the skew curve. We saw big moves last week, unfortunately, when we were off for the holiday here, so we couldn't really break it down. This week, as I mentioned, vol coming in a little bit. So we're seeing, like in that Jan contract, for example, we're seeing some of the extremes of the week of the wings coming in. The call's getting a little bit more juicy here with only about 4.5% cheap to the at the money. They were about 10.5% cheap to the at the money a week ago. So a little bit of a change there. The puts also coming in a little bit, not quite as juicy as they were a week ago. And again, this is in the Jan. So they were about 10.6% rich to the at the money. So the premium was to the puts. Now it's about 7.5%. So it's come in about 3 points there on the thing. So interesting things going on in the skew. John, when the people are coming to you now, you kind of mentioned some of the stops and things. But in general, are they coming to you saying in general, hey, we're kind of liking these levels. We want to get a little bit long here in crude. Are they spooked? What are they looking to do out there? Are they looking to hedge what they already have?
Yeah, actually, I think I'm seeing more people wanting to bottom fish down here than anything. Like you said, the psychological level for one, and the fact that there are some very subtle things that are going on during the days where the volumes are sort of, well, the volume's tapering off a little bit, which you would expect after a move like this. But the one thing that I'm seeing is a lot of overlapping prices over a 3 or 4 day period is normally a signal that, well, the dominant trend is going to head into a rest period. And we saw this on a couple of occasions on this in this down move. And today, I know we had that dip below 50 last night, but we spent maybe an hour and a half below that, and it shot right back up, and came right back to about 51, around 51 today. So it's telling me that it's a market shifting into neutral, and that you do these kind of outlier trades where it could go through a sideways trade here for between say 50 and 55 for 2 or 3 weeks, or 54 for 2 or 3 weeks, and then get back on that trade and head south. But the way it's acting right now, and at least from the people that I'm saying, nobody wants to sell it here. From anybody that I'm talking to, that they feel they've missed that whole train anyway, and they're certainly not going to start selling when it was up at 75. They're not going to start selling it at $25 cheaper. So I'm getting more people saying, how do I play the long side with very limited risk? And that's where you guys come in with the option strategies. I'm more of a directional kind of guy, and I can come up with some option strategies, but not nearly what the guys at MTM, the option side.
Now, I'm kind of curious. You mentioned that. I'm going to get to listener questions in a bit, but a question we get a lot here on this show and others is for people who are kind of coming. They've seen the volatility, they see the headlines, they're kind of newly discovering maybe the crude markets for the first time, and they hit us up and they'll say, what's a good way? Obviously, I've joked about it before. All of us as a society, we're kind of inherently short crude. Whenever crude goes up, prices for a lot of goods, transport, everything all goes up. So as a unit, we are short crude. So it probably behooves all of us to have a little bit of some longer term upside exposure to a WTI, or pick your product of choice out there. But I'm kind of curious. I'm sure a lot of people come to you for that. They say they want to establish, maybe a longer term bullish bet on crude. It's a dicey prospect. There's a lot of ways you could do it, but a lot of them require, let's say, a fair bit of sophistication. They have to go long the futures, which can be challenging for your proverbial, grandmother from Iowa who just wants to get long. Upside calls and products like WTI and things and verticals. That also requires a little bit of knowledge, a little bit of sophistication. There aren't many easy ways for the layman outside of some of the ETFs, which, they have their own issues, don't really perform as well, don't really track as well. I'm curious, if someone comes to you, and maybe if they've gotten to you, they're already down the rabbit hole a little bit, they're willing to do futures, but what's your kind of suggestion for someone who wants to come in and get longer term kind of bullish exposure to something like a WTI?
Well, first off, I would tell them, trading outright futures, especially with this kind of volatility, is kind of a dangerous thing, and I don't think I'd go in there. And if I did, I wouldn't go with the outright contracts. I would definitely, right now, I would say just buying out of the money calls might not be a bad little wager. As long as your risk is defined, that's not a bad way to go into it. Sometimes I tell people to go to ETFs, that correlate with some of these, because some people just don't. They watch futures to kind of get an idea of what's going on, but will trade an ETF that correlates with that future too, or the options of those. I'm not. So I would, or you can go to the mini contracts. Is a safe way to go. If you're going to be counter trading a trend like this, you got to find a way to do it pretty cheap. So if you can maybe get some cheap options, I have a real fear of being short options with the market moving like it is right now, and the moves that we've seen overnight. And I mean, I just woke up that one morning and saw what happened in natural gas and going, there's no way I'm gonna have any kind of naked position in an energy here for a little while.
Yeah.
It's just there's just too much going on.
I think we've all learned the dangers, or had a good reminder of the dangers of being naked short options in the energy complex over the past week. We talked about it a lot on Option Block. You can go check out our conversation there for all that good stuff. But there's a lot, you're right. Being naked short any legs, any units right now in the energy complex, probably a bit of a dangerous game unless you're doing, obviously short to the put side and you're comfortable picking up the underlying there to the upside. You probably have some sort of vertical on, listeners, just because we've all seen, how that can go against you. It works until it doesn't. And when it doesn't, it can be pretty nasty. So as long as you have a plan in place for when that happens. But you're right. Sometimes, if your proverbial grandmother in Iowa, all they do is have an equities account. They don't really even have a futures account. It's kind of hard to push them into, let's say, go along, that 6-month futures contract, or even the E-mini or the mini on it, I should say, because it's just, it's not the same beast. They're used to paper losses and things and long-term buy and holds and things go against them in the equity market. And they don't really have that in the futures landscape. So it's a little bit of a different game, but it's a challenge. And I think we're always investigating new and interesting and easier ways for people to do just that, because it's a trade a lot of people probably want to have on. Again, we're all naked short this stuff at the end of the day. So if you can find ways to go long, it's probably not a bad thing in the long run. Speaking of getting long, a lot of you guys are long equities, as John alluded to. There's a lot going on in equity land too. It's actually good we're talking equities, John, because you're holding down the FTSE Russell hot seat today. So you are contractually obligated to discuss equities, which is a good thing. But yeah, a lot lighting it up today. Our buddy Sean, like I said, traveling the hinterlands of Asia right now. I think he's at FIA Asia and a few others right here. So we miss him here in the studio. Certainly miss his delicious burgers. But that's a conversation for another day. Instead, let's dive into what we're seeing out here. Obviously, equities have been on a bit of a tear to the upside of late. A week ago, it was kind of the exact opposite story. It was all downside all the time, all volatility all the time. A lot of that vol has come in as Mr. Powell and Mr. Trump have combined to say, let's maybe take the foot off the gas a little bit on the rate hikes, and that was enough to send the market just skyrocketing upward. One of the biggest up days we've seen in quite some time across the board yesterday. And of course, all that upside movement at the end of the day, I have to remind volatility sometimes, movement is still volatility, but people always have this bias to the downside when it comes to volatility. And so all this upside giving us a little bit of a respite when it comes to volatility. VIX land out there in S&P hovering right about a 19, a little bit shy of that right now. And RVX, our old friend, the Russell VIX, at about a 22. So a little bit more than 3, about 3.2 point spread between the Russell 2000 vol and the S&P vol out there right now. So that's about in line, about 3.25 points. It was about 3.5, a little more last show we did about 2 weeks ago. So it's come in a bit, but that spread's still pretty wide. So if you're interested out there in maybe arbing some vol, trading vol between the two, might be some interesting opportunities there between Russell 2000 and the old E-mini. John, you kind of mentioned the minis. I'm assuming that the S&P E-mini is kind of your clients' go-to when they trade in the equity futures, or is maybe some other product? Maybe NASDAQ these days that's been lighting up. Maybe the Russell. Maybe the Dow. What is your poison? What's your weapon of choice out there in equity futures land these days?
Mainly, yeah, it's mainly it's been the S&P and the NASDAQ. And when it gets like this, I just, if you can go back, if you're looking at your charts or whatever you're looking at tonight, take a look back into February and see that move that we had when the Fed not the Fed, there was a report that came out, a service sector report that indicated there would be wage inflation, and the fact that there might be wage inflation, it means that the Fed would have to raise rates quicker than they had planned, or more than they had planned, and we had a devastating move in the equity markets back in February. And then it took us about 3 or 4 months for those waves to dissipate. It was like up hard, down hard, up hard, down hard. It was just crazy 3 or 4 months in a row. And we actually spent probably 100% of the volume over the next 4 months was within the range that it was established on the first week in February. The reason why I'm saying this is because we got to be prepared for that same kind of thing where you're going to have these crazy big moves up and down. The question for me in this environment is, okay, are we in an up wave or a down wave? And what used to take us a week to go at, average day ranges are bigger than an average week used to be. So, and that's not going away anytime soon. It certainly doesn't look that way. So what I try to do in a situation like this is find out where buyers and sellers have come together most often. It used to be something we could get on the trading floor just watching who was buying and selling and where, but that kind of thing isn't available now. But there is a way to track of what's fair, and momentum is the movement away from fair. So here we go. In this month in November, 2730 in the S&P is the highest volume price of the month. The fact that we're above that indicates that buyers are in control and that we are probably going to be heading higher to search for sellers. So we have positive momentum, and this all occurred after what Chairman Powell said yesterday, that they're not fearing inflation, that the Fed's job is to promote job stability or price stability and full employment. Well, we have both of those, and there's no inflation, hence the relief bid that we saw yesterday. So now it said, hey, this brought us above a fair price, and as long as we're above this fair price, there's a good chance we're going to continue on with a trend higher. So I just want to kind of give you a couple levels to really pay attention to, that if you want to play the long-sided equities, it's critical that you stay above 2730 in the S&P. This is what we talk about in the futures class, going, okay, we like this thing. There's a good chance it might move an average week's range away from this thing. Our risk is that it won't get through 73. We'll measure an average week's range or a month's range and have an objective, and work stops as the market moves in our favor. If you like to trade the Dow, I would say that the fair is 25,300. That's critical. That was the high volume price both in October and November. So and we shot above those yesterday. And if the Fed is true to their word, they say we're going to be data dependent, that's going to give us at least another two months before we're going to get inflation figures like PPI and CPI, which is consumer price index, and producer price index. Those kind of things are what the Fed's watching. And we don't get those for another 2 or 3 weeks. So I'm thinking that these markets finally are showing a kind of a bid above fair prices, which we haven't seen a lot of, and that we're going to go at the upper band of this range. And we still might be in the range that we established in October, but maybe we're going at the upper band. That gives us a lot of upside room. So I'm kind of in the camp that, hey, the equities are sort of building a base. Maybe crude oil might too, because they've both been kind of hurt at the same time. And let me just tell you what the NASDAQ one is. Well, actually, I'm looking at the QQQs there, so hang on a second. I might be able to get you a good price here.
While you're looking for that, I'm going to break down some of this E-mini options action we saw this week here over there. Again, you guys can follow along, cmegroup.com/TWIFO. Check out the quick strike report. And the E-mini S&P options have been on a tear, as you might expect here this week, just lighting it up. OI up another 5%. This is the contract that already moves and shakes already. So moving that thing 5% is a big deal. Up 125 handles on the E-mini S&P here for the week. So a lot of upside love over here. Vol, as you mentioned, kind of anemic. The lion's share of the action this week actually coming, looks like a lot of it today, actually, in the DEES E-mini contract. It's like a giant spread went up. The big trade of the week is pretty much a tie for the DEES 2018 2400, 2500, and pretty much 2600 puts. 25 half puts, I should say. And it looks like maybe a bit of a three-legged, or it doesn't look like a fly because their numbers aren't right, but 43,000 times, some sort of three-legged spread. I don't have a chance to pull up the blocks. Maybe I'll do it after the show. We'll put it in the show notes here. 2600, 25 half, 2400 print going up here on the put side, of course, in the E-mini S&P, again, for size. That's 126,000 contracts going up in again, this is the E-mini, so a smaller contract, but still. large print that's dominating the tape here for the week. That's our number one with a bullet. Number one, number two, and pretty much number three are that spread. So someone looks like that's probably, again, I don't have opening and closing numbers, all that went up today, but looks like someone putting on maybe a size downside spec before the end of the year. I'll have to dig into the OI. Perhaps that is closing, but either way, that's a big print out there. Other than that, looks like front week going away. 2,600 puts leading the tape out there. That's only about 15,000, way below what we're seeing out here in some of these longer term stuff. Let me look here really quickly since we're talking equities. Our buddies there, Russell 2000, what was lighting it up out there? Russell 2000, like I mentioned, coming in, that VIX to RVX spread was pretty wide. Russell 2000 up about 50 handles here on the future, 1535 coming into showtime here. And where the action was, actually looks like a pretty sizable print out here in the Russell 2000, also in Dece. Also to the downside, so read into that what you will. A very large print for Russell, at least, of the 1510 puts lighting it up. Pretty much by an order of magnitude out here, the biggest trade of the week here. All on Monday, pretty much all opening. The 1510 puts here, which is kind of interesting. So a good week out here in terms of volume for Russell 2000 options. And again, near-term Dece downside puts leading the charge in both E-mini and in Russell. So, again, I'll have to dig into those a little bit more here, John. But maybe the options market may be showing they're not quite buying what the equity market is selling. What do you think?
No, I mean, I don't think that it's really going any. I'm just thinking it's going after the upper band of the range before it goes back and tests the lower one. This is the kind of trade we got to deal with. That let's just call it, we're right smack dab in the middle of where it's going to be, and you'll get a good swing up. And just by the short-term momentum indicators, it looks like we're going to head north first, then we'll probably head south. But this is so similar to what we saw back in February when the volatility got so high and it took so long for the market to sort of just get back to normal. And we've just started this. This could be a pretty crazy ride well into January. We did it for 3 months before, we're not even a month into it so far. And when volatility gets this high, and these programs are just seem to be running all the short-term signals right now. Good positive momentum, and I'm not seeing any response from sellers. So I'm thinking maybe a little upside first, but all I'm thinking is we try and think about. How can we get in a trade? This is how tough it is right now. If you can get on a trend and ride it for 3 to 5 days, you're doing a heck of a job, because the markets are shifting so often now that if you want to be a trend trader, it's just going to be a rough ride. You got to be thinking more in 3 to 5 day trends and not much more right now. It's just not typical with this kind of a move.
Speaking of rough rides in the futures, sir, I want to get some listener questions. Before we do that, I got to ask you, you're kind of boots on the ground educator out there on the futures side. The rides don't get much rougher than the ride we've seen in the Bitcoin futures over the course of the past year, going from 20,000 right now, threatening 4,000 again, off another 125 here in the CME Bitcoin future as of showtime right now. They actually, looks like they broke through the downside very briefly. The 4,000 level, 39.85 is the low on the Dece contract, got a little lower out by March, 39.60. So yeah, about 1,000 contracts on the tape there so far today. I'm curious, John, people coming to you looking to learn about and trade futures all the time. Has there been a lot of interest here in the listed Bitcoin future? And also maybe related to that, has it ebbed or waned as a result of the recent sell-off, or is it maybe about the same?
I haven't heard a whole lot there. I think people are still very fearful of it and don't really understand it, at least not from the people that I've talked to. But again, what we try and do is what's a good idea to do is take one approach or a strategy and try to apply it as logically as you can to everything else. So for me, when it comes to Bitcoin right now, I've got a market that's severely oversold when I think fair value is probably closer to 550 or 6,000. That while this ought to be where the market should be gravitating to, I just need a reason or some sort of a formation of support or proof that buyers are operating. This is kind of what I'm thinking about with crude oil right now, that even though it looks as bad as it does, that it is starting to build a base. And as a futures trader or teacher saying, okay, the opportunity here, there's much more upside potential than there is downside because we've defined we defined bottom. I'm not sure that's quite right yet with Bitcoin. It's going through that process. It looks like somewhere around 3750 might be the lower end of the range, but that's just a bit too early to tell. And after this past week, another market that people are a little frightful of.
Yeah, every time someone thinks they've established a bottom or a low in Bitcoin, we hit another one. Speaking of lows, let's see if we can maybe hit some highs with some of your questions. It is time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your segment, the Futures Options Feedback segment. A lot of people chiming in with a lot of different stuff. Let's see how many we could squeeze in here. Maybe we'll go an extra few minutes to get a few more of you on here. We got Georgio just talking about Bitcoin. Georgio, our old friend, formerly of Saxo Bank. Now I think he's an options man about town, chiming in saying, we need some options on the CME Bitcoin futures. Yeah, I'm with you, Georgio. We need options on all of it. I've been waiting. How great would it have been to have options on the ride from 20,000 down to 4,000? But alas, we did not. Everyone in our poll at the beginning of the year thought we'd have them by Q1. I seem like the laggard, you know. Oh, I said Q2. I was the pessimist, and lo and behold, here we are winding down in Q4, and no options anywhere to be seen on the horizon from any of the holders, CME, SIBO, anybody. So yeah, unfortunately, no. I'm with you. I'm with you. All of our audience, we all want more products to trade out there, and we all want the options to trade on the futures are nice, but have the options too. Give us the chance to play. And yet, what did Buffett infamously say last year? I'd love to have a put on Bitcoin, but I sure as hell don't want to short it. And I think that's a space a lot of people are in right now. And so without the options, their options, pun intended, are limited. But yeah, I think a lot of our audience is with you there, Georgio. Mark Brant, our old buddy here, is saying in the chat, saying the Nat Gas skew, is still way to the calls, but a risk reversal could be on the horizon. Yeah, you're right. The calls are leading the dance. We didn't get a chance to do a huge breakdown of all of it. I mentioned the 5-handle calls are lighting it up. All the volume this week coming in that Jan contract and Nat Gas over there on CME, and the 5 calls, Nat Gas coming into the show right around 460. The 5 even calls were dominant, about 13,000 or so on the tape. So that's kind of given a lot of lift to that, as kind of keeping that bid to that call skew. That said, the vol has come in a little bit this week, as you might imagine, maybe a lot. And so we've seen kind of the depths of those wings kind of coming in a little bit. So the puts are still bid, but the calls are still bid, but not quite as bid as they were a week ago. A week ago in that Jan contract, it was about 15.6, almost 16% rich. Again, to the at the money, you guys can find all this in the quick skew. It breaks it down all for you. It makes a cool little chart. So head on over there to bantix.com to check it out for yourself there. Now they're about 10.5% rich to the at the money. So still rich, but not quite as rich. Puts, same deal. Puts were cheap, about 16% cheap to at the money. Now they're about 6%. So puts getting a little bit of a bid. So maybe I'm assuming maybe you're looking at a bullish risk reversal. So maybe puts getting a little bit more bid, calls getting a little bit cheaper. Maybe that's lining up a little bit more favorable for you. If you're looking the other way, looking for effectively a collar on that, then maybe not. But still interesting stuff. Yeah, I'm a fan of risk reversals. I don't know. Nat Gas is crazy town right here now though. So I don't know. Buyer beware when it comes out here. Like John was saying, a lot of his clients and mentees are kind of just watching a little bit first to make sure. So maybe that might be a good course of action to just make sure you're familiar with what's going on out there, because this is the space a lot of people said couldn't do what it just did. So we're in kind of somewhat uncharted territory here. So just bear that in mind when you're slinging up. But yeah, those skew wise, they are lining up for risk reversals out there. I do concur, provided you're commensurate and understand all the risks that are out there. Speaking of skew, got a bunch of skew questions here today. This one, ChevCR wants to know, is there ever a time when equity call skew is higher than put skew? Well, you can read that a couple of different ways. Individual equities, yeah, it happens all the time. Look at an Apple back in their heyday, right before earnings or things like that. Usually it's around some event. People are super bullish. They want to pile in. That can happen in an individual name. Biotechs are a good example. They have bids to the call side all the time. So individual names, sure, can happen all the time. Broader indice-wise, that's a much tougher thing to have come to pass. You have to have a lot of crazy things happen. I'm trying to think back. The last big one I remember, and it's happened sporadically, but when I was actually actively trading in the SPX, you have what's, colloquially referred to as a bit of an upside crash, and a lot of things have to come into effect to really make this happen. But we had a good scenario. This is, I think, by around early 2000s at the time, where a lot of the pit was short because customers are buying upside calls, and so actually it got to the point where obviously your customers are buying, so we're short, and then we're short all these strikes, and they had an S&P rally and rally and rally and rally, then kind of continue rallying beyond a level that anyone really anticipated, and also broke through all the strikes where everyone in the crowd was pretty much short. So now we're getting into this crazy town strikes that no one anticipated and didn't really have on. And so a lot of people were short that level, and so they needed to kind of just short vol, short everything else. They needed to start just closing out the risk and closing out the books. So we saw people bidding up the calls as a way to kind of just close out and get some risk off the table on all the short strikes they had just blown through to the upside. And that's what happens when you have a bit of an upside crash. So that can happen. I'll have to go back and check. I don't know if the calls outpaced the puts or if they just kind of got more in line with them. I don't know. I'll have to look at the exact magnitude of the move, but it's got to be a scenario like that where you have extended, protracted upside moves for a sustained period of time. You're blowing through a lot of strikes people didn't think you're going to blow through. People were short and you need to get them back, and that's usually what's going to happen in that kind of environment. But outside of those kind of aberrant scenarios, not so much. Another question on skew, but I don't know. Here's an interesting one. Maybe, John, you could weigh in on this one. He says futures option, but you can also put future into this. E. Davis wants to know, what's the best futures option or indeed future for newcomers? And he asked, is it crude? John, you have a lot of newcomers coming to you guys in Market Taker Mentoring, maybe come into futures or futures options for the first time. Where do you traditionally steer them? Is it crude? Is it maybe the equities? I'm sure it's probably not Nat Gas right now, but where do you send them? Yeah. Go to Nat Gas. It's easy.
Yeah, actually, I think probably where we usually start first is the equities, because everybody sees it, watches it, can pay attention. It's on every radio station, what's going on in the Dow and S&P. So something that's first of all very volatile, and second of all very liquid. So I like 10-year notes, I like treasuries, and crude oil is good. But right now I'm I'm more about the treasuries and equities. I think that they're more manageable. I actually more like treasuries because they're more manageable now. But I guess if I had to put it into order, I'd start with treasuries, equities, probably crude oil, then I'd go to gold. But I would want to watch each and every one of those because they are all interrelated. You might be able to have a good trade in gold simply by what happened in the dollar. I mean, there's a lot of relationships that if you're really paying close attention, you might be able to get an edge on one trade simply by watching a market that just happens to coincide or correlate inversely or correlate together. I mean, I think if you're going to be a futures trader, you've got to be looking at least 4 or 5 different futures markets. But to trade them, liquidity-wise, pick a treasury, a 10-year note, or a 30-year bond option, or an S&P NASDAQ would probably be my next spot.
Interesting. Treasuries. I didn't think you were going to go there. That's an interesting one. That might be worth unpacking that a little bit more on a future show. Unfortunately, John, that music means we've come to the end. It's already been an hour. Amazing how time flies here when we're talking all things futures, options, and indeed futures here on TWIFO. But before we go, John, you're our guest. You get pride of place here. If people want to reach out to you, they want to learn more about what you guys are doing, not just on the options side, but on the futures education side over there at MTM. Where should they go, sir? What should they do?
Well, you could go to the MTM website, and there's everything that you'd want to know about MTM is right there. If you're interested in looking at a unique charting software, you can go to macrograph.com. That's the software that I use for analysis, and we use quite often in our class. But Dan Passarelli and John Kamisic are our head option guys. If you go to MTM and you really want to get into options mentoring and learning, those are the two guys I would definitely recommend you go to.
And MTM listeners, in case you don't listen to our Options Bootcamp program, is Market Taker Mentoring. Head on over there. 2 T's, Market and Taker. Don't put the 1. I don't know where that takes you. And check them out for their options education, but also their growing futures offerings are there too. And you can combine the two, learn about the futures, and then trade the options on the futures. And you have that very tasty, delicious chocolate and peanut butter taste greats together combo. MarketTakerMentoring.com to learn. By the way, people are asking in the chat about their VIX picks. We'll find out the answer. We don't know the answer. We'll find out the answer to those tomorrow on VolViews. Because remember, we weren't picking for last week. We were picking for 2 weeks. That's why it was such a challenge. We're picking for 2 weeks from our last show. So tomorrow, at the end of the show, crystal ball time, 1 p.m. Central, is when we will find out who was right, who was wrong, and who maybe perhaps walks away with fabulous prizes. We shall see, so tune into that. Of course, that's tomorrow on Volatility Views, noon Central, and then the picks comes right on the end, the analysis or crystal ball right around close to 1 p.m. Central. So check that out tomorrow. Of course, I want to thank Jeff White over there for joining us over there at CME. Head on over to cmegroup.com. You can get the report, cmegroup.com/TWIFO. Look on the energy side. I know Jeff wants you to check that out a little bit as well. See what they have cooking over there. Nat Gas, WTI, a bunch of products lighting it up over there in the energy complex. Only had a brief time to check in today. We'll get him back on when we can do a little bit longer dive into the broad spectrum of the complex, all the products over there sometime soon. Of course, our buddy Nick, who's traveling, and indeed Sean, who's traveling over there. Check out Quick Strike, of course, at Bantix.com, BANTIX.com. If you haven't signed up yet, I honestly don't know how you're trading this stuff. This is really the only game in town when it comes to analytics on futures options. Bantix.com. Sign up. Tell them we sent you. Nick will be super excited to hear and see you. And of course, Sean and his team over there at FTSE Russell. Check them out, FTSERussell.com. Give them a follow on Twitter over there as well, FTSERussell.com. A lot of great data they're putting out there about active versus passive, a lot of volatility data, all those benchmarks they were talking about before, overwrites, buy rights in things like the Russell and other products. Check them out. Interesting stuff. So on behalf of John and Jeff and Nick and Sean, who couldn't make it, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for chiming in on the chat, for sending in questions, all the fun stuff that you guys do. Keep it coming. And we'll see you next week for more of This Week in Futures Options.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.